So let's take a look at what rare earth minerals are and why they're important. Okay. So first of all, these are essentially 17 different, nearly indistinguishable, soft, heavy metals, but they have very diverse applications, especially in electrical and electronic components, but also in lasers, glass, magnetic materials, and industrial processes. Now, the reason they've come under a lot of attention is they are a necessary component of more than 200 products in high-tech consumer, okay, such as your cell phones or your hybrid vehicles, electric components, and flat screen motors and television. So all the explosive growth that you're expecting going forward, be it because of the economy improving or be it because of the electrification of everything, these are going to come into play. Now, the challenge with this is that currently China is the single largest maker of these rare earth elements, okay, followed by Malaysia and Australia. And that's why having access to these may end up becoming a strategic importance from a national security perspective for countries, but also then positions China right now as a strategically advantageous country for producing these, right? So that's where they've been coming under a lot of scrutiny. So let's take a look then at the various potential investment vehicles available that give you exposure to these rare earth minerals. Yeah, so let's take a look at first an ETF that gives you exposure to a wide variety of these. But second, then after that, I'll have a series of individual stocks that we can walk through. And then, in conclusion, we'll talk a bit about what it actually means. Okay, so let's move on. So before we get into the actual ETF itself, I'd like to just walk through how this chart is structured first. So the name of the company or the ETF is here. In this case, it's Vaneck Vectors ETF. This is the most common rare earth ETF that's out there. What this is also showing at the top here is the actual chart of the stock price. 1 year chart on a daily basis rolled up. And these are the various simple moving averages. This is the 200-day. This one is the 100-day, 50, 20, and 10. Just helps to take a look at it from this perspective so we can make some judgments as you go along. So that's what the up here. This is the volume that was created. Higher the volume, the higher the strength behind the move upside or downside. And looks like there's been a significant amount of interest from a volume perspective. This next one here is the RSI, which is the Relative Strength Index. What this tells you is that if it's above the 70 number, that means it's in overbought territory. And if it's below this number, which typically is about 20 or so, then it's under or oversold territory, right? So as you can see for Vaneck Vectors, it was kind of a sleepy, dull stock. Like everything else, it took a dive in late March of last year, thanks to COVID. Then it started to come back. And what really happened is in November, just like a whole bunch of other small cap companies, when the vaccine news came out and was clear that we're going to have a reopening of the economy, these stocks all took off, right? So it went from what was at a $40 stock to all the way to almost $83, $84, and it's back down to 76. So if you think about it, it's doubled in a matter of less than a year. So the question always remains, with these stocks, it is forward looking. How much further can it actually go beyond 100% up? And not just that, some recent, if you look at the technicals here, it's broken through. It's so as I said, remember, it's a 200-day, 100, 50. This is 20 days. So it's actually below its 20-day moving average. So the next support level here is at the 67.55, which is the 50-day moving average. And also, if I can invoke a head and shoulders pattern, this is one shoulder, left shoulder, that's the head, that's the right shoulder. Typically that, leads you down as the next leg down rather than go up. So, when you think about these, technical analysis currently maybe is not set up. Fundamental part of the reason may be that the stimulus and the opening economy has been priced in. Now it's coming back down, primarily as the vaccination slows down or the reopening gets pushed out further. This may actually just flatten out and not do much or come back down, right? So that's kind of what you need to think about when it comes to evaluating this stock for the long run. It may still make a run to the rest of the year, but the question is, what's going to happen over the next month or two. Okay. So Vaneck includes positions. I mean, their biggest positions are about four. Let's see if you can find them here. Vaneck has four different positions in the Chinese mining companies, but then they have lithium, Linus, and again, I guess here two more Chinese, and then Galaxy Resources, right? So the next couple of charts, we'll look at lithium, Linus, and Galaxy to see how those individual stocks within the ETF holding are doing. Now, the challenge also, part of this is that, when you buy a ETF such as this, it is not a cheap when it comes to fees and expenses, right? So gross expense ratio is about 0.64, but net expense would be about 0.6%. So, contrast that with the SPY, and SPY is, for all practical purposes, almost free, right? So you're going to be paying 0.6% of whatever you invest in for an active management of this ETF. So that you have to keep that in mind when you think about the returns you're looking for. Okay, so with that, let's get back to the individual stocks. So the next one here is Galaxy Resources. This is an Australian company. You'll notice that the chart is very similar to Vaneck. Now, it hasn't spent as much time in the overbought territory, and it has come down pretty significantly. And it's actually, it's way below its 20-day moving average. It's getting close to its 50-day now. But having said all that, look, I mean, this stock was 40 cents back, almost a year ago, and now we're talking about a stock that's at about $2. So it's gone up, four times, well, five times actually. So it's pretty. From that perspective, it's maybe had its run, and we got to figure out, what it's going to do next, right? So that's Galaxy. Then Lithium Americas. This is obviously an American company. Again, it's very sleepy, like Vaneck was back in the day, $5, and now we're talking about $20. So it's gone up by four times, 400% higher, and it's broken through. It's 20-day, and the 50 days. It's a bit far down, about $15 or so, right, from the current. Now, having said that, this is more closer now to its oversold range down here. So from a technical perspective, you want to think about that. But at the same time, that oversold down below has come at a loss of volume, right? So that may be in a way some bullish signs, but that's something you'll have to figure out and make a decision for yourself. Okay, so that's Lithium Americas. Then you got Linus Rare Earths. Again, it was a relatively cheap stock, less than $2. Now it's about $4, so it's gone up 100%. But on this one in particular, you can see it's actually closer to oversold territory, but at the same time, it hasn't broken through its 20-day yet. But it's certainly still showing the head and shoulders pattern, so it may still break through and may be on the downward path for the next few weeks. So that's Linus Rare Earth. The next one here is Neo Performance Materials. Now, this is the story of Moly Corp. We talked about so Moly Corp declared bankruptcy, and then their biggest creditor essentially ended up owning them, Oak Tree Capital, and then they started Neo Performance Materials coming out of Moly Corp, and that's what this company is. Look, at the beginning, before the pandemic, this stock was at about $8 or $9. Now it's at 12, so it's gone up 30%, but it hasn't broken through. It has not broken through the 20-day. I don't I don't know if it necessarily shows any head and shoulders here, but it seems like it's on an uptrend and it's still on the lower than the median uh, on the on the CCI, but also kind of in the median on the RSI, which is the relative strength index, right? So that's something to keep in mind if you feel like you want to play this. Maybe Neo would be something to consider, not to be confused with NIO, Neo, which is the electric car company out of China. Okay, so that's that. Then the next couple of ones are a bit more on the speculative side. I mean, look, this stock was under $1. This is Texas Mineral Resources Corporation. It's very speculative. It's not producing any minerals yet, but it's been billed as the answer to China's dominance, the American answer, all American answer to China's dominance in the rare earth elements category. But I mean, this is obviously speculative. This is taken off like there's no tomorrow. This is way beyond overbought at this point. It's gone from what 150 to 2.5. So, as I said, speculative, maybe a few percent points of your overall portfolio. If you want to play in this, consider that. Otherwise, it's something to learn from. And last but not the least is a Canadian one, which is UCO Rare Metals. This is an interesting one because this is actually currently it's at 1.4 and it's below its all-time high, which was before the pandemic started. All the other stocks we talked about, they have way surpassed their pre-pandemic levels. This one hasn't. So, yes, it did get up to 1.67, then it dropped, but and then bounced back up again. You can see there was some support here at the 20-day moving average. Came back down to it, bounced back up, and is backing down. Now it may bounce off of the 10-day moving, who knows, but it may come back down to the 20. So fairly highly volatile stock. But that's another stock for you to consider. Now, look, so Sanjay, you had a question about these stocks and what they meant. Overall, looks like as an ETF, they've had a pretty good run. These stocks. So the question becomes how much is still left in the tank. At the same time, the technicals don't look very encouraging, but the Fed has been the ally for all stocks, especially the reopening stocks. So tread carefully. Needless to say, maybe you start off with some smaller position sizes, and see how the stock does, and slowly dip your toe and slowly build your position size if you're very bullish on these types of stocks. Okay, so with that, we will conclude this segment for now, and we will switch over to my Q&A and conclusion of that Q&A with Amol on the discussion about machines.
Maybe I'll ask you a couple on the machines part of it as well.
Sure.
It was very interesting. The very first episode just blew my mind when you showed us a Maserati at a really affordable price, which was like, wow, hey.
I don't know about that because after the second last episode, I got some hate mail saying, "You think 47,000 is an affordable car?" I'm like, okay, all right now.
Well, if you're dreaming of a Maserati, at least your dream's a little closer to me, right?
That's right.
So no, that was interesting, but that kind of led me to think the other way around, right? What I was thinking is, hey, just exactly like you pointed out, if I was to have $40,000 hypothetically, and I'm looking for a car, should I be looking at a supercar like a Maserati, maybe a couple of years old, 3 or 4 years old, as you saw in that earlier this thing, or should I be looking at a brand new, maybe a conventional car, the best-selling car in the US, like a Camry or Accord, And the trade-offs in my mind were, in multiple dimensions. First is, of course, Maserati has the wow factor for sure,
Right.
but there's the added, cost of maintenance potentially, or spares are a little bit more expensive or whatever.
Yep.
And on the other hand, a brand new Camry or a Accord, although conventional, has 4 more years of innovation on it, right? In some sense, maybe it has caught up on some aspects of it. So I'm just curious to know, what's a good trade-off in your mind?
I mean, this just like scotches. I mean, yeah, this is probably even more personal and even more as at stake, right? At a scotch, even if you're buying somewhat expensive scotch, you're talking about 150, $200. The cars, you're talking about thousands of dollars. So this becomes even more subjective and it's even more personal, right? So the question really is, why are you buying the car to begin with, right? So there's a few questions that depending on the answers to those, where you end up checking the box, you'll get a different answer, right? So I mean, was the primary purchase just it's a commute to work and shuttling the kids around to their games, right? Or is it more of a city driver car? You want to go around in the city, have fun, whatnot? Or is it a car that's more of a Sunday car, if you will, that you keep and you take it out for some fun, right? So that's kind of one set of questions. But then also other questions where how long do you plan to keep it, right? Do you want to buy it and then forget about it, as in you keep it until it breaks or no longer can be used? Or do you expect to keep it for about 7 years or 5 to 7 years? Or do you expect to keep it 3 years or lower? I mean, depending on that, that may change. And then what's your habit really, right? What's your buying habit? Are you somebody who gets bored easily with even if it's a significant purchase, and hence maybe you want those big brand cars, but maybe for 3 years, and then you want to change it out and something new, or rather you're someone who wants some reliability and is going to keep the car for a long time. So I think it's it's a very personal decision, and I can tell you. So an example is, I just talked to. We'll probably have him on the show in maybe next episode or the following couple of episodes. I'd like to feature that car, but I'll tell you. So he was faced with the same dilemma, and I worked with him and I helped him out with 2 or 3 different options. One was a Porsche Cayenne. Second was a Volvo XC, I think, no, Volvo S90, and the third was a Lexus ES, right? So if you think about these 3 cars, one is the ultimate in reliability, second is the ultimate in safety, and the third is performance. So very different cars. Part of it, the other things that came into play for him were he didn't want to go too far to get the car that he wanted, but he was buying the car for it to be a daily commuter, go back and forth to work, right? But at the same time, he also wanted a hybrid. So he tried to find a hybrid in Volvo. He thought he found one, but when he did a test drive, he didn't really like it, didn't feel as new. He found a Lexus that feels luxurious, and he got it for, what is it now, a third of the price less, 30% or more, actually, maybe 35, 40% less than the MSRP just from 2018. So think about that, right? So you gotta see what all the things you really want, but he's really happy. I drove the car the other day; it feels great, right? To buy a Lexus ES at such a discount just after 2 years, and you sit in the car, you look at the car, and it looks like it's pretty much new. So it's a no-brainer. It was a no-brainer for him, and I'm happy for him. So it all depends, right? What do you want to do with the car? And that's where you got to start. If you're going to buy a car because someone else bought it, that's probably the worst way to start it.
No, you're asking some profound questions here. I wish I knew the answers for myself. I was talking about it with my son, and he said, "Hey, I want a car that's comfortable to the passenger, not to the drivers." So,
yeah, you should. You know what you should? You should say, "Okay, who's paying for the car, son?"
No, great points. Hey, thanks, Vikram, for the conversation. This has been very, very insightful. I can't wait for more episodes to come, and looking forward to continuing this conversation. Thanks
No,
for
this is
having
great.
me.
I really like this. Just back and forth. This is great. Obviously, this is based on my experience. Part of the reason why I started this was to share my experience, and hopefully people learn from it, whatever they choose to. So this was great, and maybe you can do more of these in the future.
Cool. Sounds great.
Okay,
Looking
awesome.
forward to
Well, Amol, thank you very much. Have an excellent week, and we'll see you again on the next episode of Markets, Vaults, and Machines. See you
it.
soon.
Perfect.